my view on what's happening in both these markets is that it's a last kind of gasp effort by the usual suspects who have massive paper shorts to cover as much as possible. And also by the speculators, they always try it on. People who think gold and silver are too high and they don't look at the fundamentals. In my opinion, they come along with the bullion banks or whatever, and they short it. But we've seen this since late last year, that every time they do that, the market comes right back up, and very quickly. We're not back 3, 4, 5 years ago when, if this were to happen, that would be the top, and the market would continue going down for months, maybe even a year. So I think we're in a different environment. I think the break of 50 in silver last year was historic, and I know it took 45 years to break above that level, but it's a new paradigm for silver. It's a new territory for silver. Yes, it's going to be very volatile, but it's not volatile because gold and silver are assets that are risky, but I think it's because the fiat currencies are struggling. The dollar, the euro, the pound, all fiat currencies, they're struggling to keep their purchasing power, and they will continue to do so, mainly because the debt is so high, right? So there is something that happened on Tuesday that tells me that they're desperate, and it's the first time since late last year that it happened, and it was the New York Fed's repo operations. So they provided overnight liquidity to the banks, yes.
According to Mario Innecco, silver breaking $50 is historic and marks a new paradigm. He warns the New York Fed pumped $30.5 billion to suppress precious metals prices. COMEX silver vaults are draining fast, and a major supply squeeze could hit by February 27th as Shanghai also tightens silver rules. Thanks for watching. Give a thumbs up and subscribe to Find Metals for the latest insights.
There's something else that I wanted to talk to you about, and it's to do more with silver. And there's been a lot of talk about the fact that there's a lot of physical silver leaving all the vaults, not just on COMEX, but LBMA and in China as well. But we're going to focus on COMEX because we're getting to February 27th. And why is that important? Well, that's the first day where you can demand delivery for the March contract, which will become deliverable. I checked the open interest, the latest numbers. There's still 285,315,000 troy ounces of open interest. Yes, it has come off a bit, but there's a lot of people covering this. People that I follow and I've interviewed. One of them is Dario, and he posted this on X, and I'll read it for you. He says, breaking 3 million ounces of silver are pulled out from the COMEX registered inventories and are taken out of the vaults right away. Don't even just shift to eligible and sit there a bit. They're just basically taking it completely out of the vaults. Like he said, they're not leaving it in the eligible. Dario has updated us on the total registered inventory on COMEX, and it's at 92,154,869.452 to be exact. So, and as I said, it's the open interest right now is 285 million. So a lot bigger, right, than the vault, the registered vault amount. Yes, there's still about a week for people to roll over or close their March positions, but it's getting close. And I also saw that in China, they've changed some of their rules Let's have a look here. I saw this posted yesterday by Mark 4XX on X, and he said Shanghai Futures just declared war on paper silver starting February 27th. It says the Shanghai Futures Exchange has just announced a major rule change effective February 27th, 2026. It directly targets near-term silver futures positions and is designed to protect China's critically low physical stockpiles. This move could send shockwaves through global silver markets, especially the paper-heavy Western exchanges. Here's what every silver investor needs to know right now. I won't go through the whole thing, but you can pause the video and have a read of what's going on. And it's interesting that it coincides with that date, February 27th, which is the first time that you can ask for delivery on COMEX of the March contract. Dario contacted me through the DM on X, and he said he thinks the only way to attract the eligible stockpile is for the price of silver to skyrocket in the next week, because he doesn't think that they will want to let it go. Interesting times. Well, I told you a few weeks ago I was going to Ethiopia with Chancery Royalty, the company that asked me to join their board. And we had change of plans because of security reasons, because it was a really important trip. So we actually came this past Sunday night. I flew out of London and I arrived in Addis Ababa, the capital of Ethiopia, on Monday morning. And here we are, Thursday morning. I'm leaving tonight back to London. A lot to talk about, but I've been watching the markets as well, and I want to talk about that. And don't worry, I'm going to talk about Ethiopia in a minute as well and what we've been doing here. But I think it's important to update you on what I think is going on in gold and silver. I saw that on Tuesday, well, even on Monday, it was a holiday, public holiday in the U.S. The markets were thinner. It's still the New Year period in China, so the markets are closed. So, not surprisingly, the bullion banks, the speculators attacked gold and silver. They continue to attack it on Tuesday, and we saw silver in particular drop back to like 71 handle. Well, as I look here, gold is at 49.88. So, and I saw that yesterday, gold rebounded back above 5,000 for a while. It did come back below 5,000, but it still looks really good. Silver did even better. It rebounded almost, I think, let's have a look here. Yeah, the high yesterday was 78.34. Today we're trading at 78 right now as I speak in the spot price, and the high's been 78.30. So, yeah, it's a big rebound from the low on Tuesday, which was 71.96. So, yeah, they got it down quite a bit. We closed last year, I think, around 71.30. So, yeah, gold and silver are still up on the year. Gold closed at 43, just above 4,300 last year. So still doing really well. And I think, yeah, there might still be an effort by the shorts to shake people out. And this was the first time, as I see here on the chart, from the New York Fed since January 2nd, when they provided about 22 billion. Well, on Tuesday, February 17th, they provided 30.5 billion. What happened there is the primary dealers who deal with the New York Fed, and these are the major financial institutions on Wall Street. They can be American or foreign. They came in and they borrowed 18.5 billion from the Fed, providing U.S. Treasuries as collateral, and they came in and borrowed $12 billion from the Fed overnight, providing mortgage-backed securities as collateral. So why do they do that? Well, I think it's all to do with the precious metals market. It's speculation, of course. I'm not privy to what the banks do. I'm not a fly on the wall there. So, but if you notice here on this chart of the repo operations, it was towards the end of last year, beginning of this year, that we had huge repo operations, like almost 75 billion on December 31st. As I said, I'm still bullish gold and silver, medium to longer term. And it's one of the reasons I came here with Chancery Royalty to Ethiopia. And it's one of the reasons I accepted the position on the board of Chancery Royalty in the beginning of January. So it hasn't been that long. And what royalty companies do is that they fund projects that otherwise would have to wait a long time to find the funding, and they provide it at critical times. And this is what happened with KEFI Gold and Copper, and their project in Ethiopia is called Tulu Kapi Gold Project in Ethiopia. And yesterday we traveled to where the mine is, well, very close to where the mine is, and it was a huge event. And I'll read to you about it here. It's come out already in the press. You can Google it, KEFI Gold and Copper News, and you'll see it. KEFI commences construction at Tulu Kapi Gold Project in Ethiopia. So here you have the Prime Minister of Ethiopia meeting us here. I was there, and I shook hands with him. So what does it say? It says AIM listed KEFI Gold and Copper. So AIM is the alternative investment market in London. That's where KEFI Gold and Copper is listed. Has broken ground at the Tulu Kapi Gold Project in Ethiopia, which will provide about 140,000 ounces of gold from 2027. I think it's more from 2028, but anyway, it says here the commencement of the construction works at the project comes after KEFI undertook more than 10 years of development and preparation. This is since the company acquired the project between 2013 and 2014. Furthermore, this gold project will join others in Africa, such as Royal Ghana Gold Refinery, in boosting the continent's overall gold production capacity. So this is where I was yesterday, the groundbreaking ceremony. The groundbreaking ceremony was officiated by Ethiopia Prime Minister Abiy Ahmed Ali and Ethiopian State President of Oromia Shimelis Abdiisa. Also, they were accompanied by other senior government, local community representatives, and other project stakeholders. The CEO, Harry, I'll probably speak to him. We'll probably make a video. He's been working really hard at this. It hasn't been easy, but he's finally gotten over the line. And they're going to start building these houses first. And in terms of gold mining, their first pour will be in the beginning of 2028. And yes, Chancery has a royalty on KEFI Gold and Copper. And that's why we're here. We were instrumental in getting the company over the line in terms of the funding.